The International Monetary Fund or IMF has warned that the 21st century global economy, which is built on intricate supply chains and complex financial linkages, faces serious risks if this integration starts to unravel. It warns that any disruption could spark significant economic instability. The caution came alongside a downgrade of India's economic growth forecast in the IMF's latest World Economic Outlook. India's projected growth for the current fiscal year has been cut to 6.2%, down from 6.5% forecasted in October and reaffirmed in January. Despite global headwinds, India remains the world's fastest growing major economy, according to the government's economic survey of 2024-2025. The survey projects growth between 6.3% to 6.8% for FY26, driven by strong rural demand, robust services, and a resilient manufacturing sector. The IMF also slashed its global trade growth outlook amid growing concerns over rising trade tensions, particularly from US tariff actions. The IMF now expects global trade to grow just 1.7% in 2025, sharply down from 3.8% in 2024. The agency also downgraded its global GDP projections, with the world economy expected to grow 2.8% in 2025 and 3% in 2026, both down from its January estimates of 3.3%. The new forecasts are well below the 2000 to 2019 average of 3.7%. The US economy is projected to slow to 1.8%, nearly a full percentage point lower than earlier expectations, impacted by reduced demand and trade policy uncertainty. Europe's growth is expected to remain muted at 0.8%. Emerging markets and developing economies are also facing downward pressure, with growth forecasted at 3.7% in 2025 and 3.9% in 2026. China, in particular, is expected to be significantly affected by recent trade measures.
The surge in policy uncertainty is a major driver of the economic outlook. If sustained, the increase in trade tensions and uncertainty will slow global growth significantly. Reflecting this complexity, our report presents a reference forecast which incorporates policy announcements up to April 4 by the US and trading partners. Under this reference forecast, global growth will reach 2.8% this year and 3% next year, a cumulative downgrade of about 0.8 percentage point relative to our January 2025 WEO update. The global economy needs a clear, stable, and predictable trading environment, one that addresses some of the long-standing gaps in international trading rules. Monetary policy will need to remain agile and respond by tightening where inflation pressures re-emerge while easing where weak demand dominates. Monetary policy credibility will be key, especially where inflation expectations might de-anchor, and central bank independence remains a cornerstone. And we're just coming off the cost of living crisis, a surge in inflation rates to double digits that we haven't seen in more than a generation. So the critical thing is to make sure that inflation expectations remain anchored, that everyone remains convinced that central banks will do what is necessary to bring inflation back to central bank targets in an orderly manner.